The E-mini yesterday had an unusually strong reversal on the 5-minute chart, and it created a good-looking buy signal bar, and it's the third good-looking buy signal bar in the past couple of weeks. Here we had an entry that was had bad follow-through. Here we had a terrible entry, and then the bulls again have a buy signal bar yesterday. Today we could have gapped up and had a huge bull trend day, but we did not. This is not the way the bulls want today to begin. They don't want it to begin in the middle of yesterday's range. Today's Friday, so traders pay attention to the weekly chart. At a minimum, the bears would like this week to close below last week's low. Last week was a buy signal bar, a bear doji, not a good buy signal bar, but still a buy signal bar. We did not go above its high. Instead, we went below its low. At a minimum, the bears would like this week to close below last week's low and have a gap between last week's low and this week's close. And then traders will look for a test of this low, April low, or the February low. The triangle might simply be expanding. So instead of that low, this might become the low of the triangle. Or if next week we trade down and then up, next week's low could be the low of the triangle. Bulls testing the breakout point above 32, and again testing last week's low, double bottom 48, possible low of the day. The stronger this bar is, the more likely we'll get a trend from the open bull trend. The market did not react to the unemployment report. We had a big doji and a very quiet Globex session. Lots of small bars, lots of sideways bars. So not much energy. There would be much more energy if today had a big gap up above yesterday's high. And this open in the middle of yesterday's range reduces the chances of a strong trend day up or down today. This kind of a rally where you have 5 bars, 5 big, 6 consecutive bars, but 5 big bull bars closing near their highs usually leads to follow-through buying over the next few days. Therefore, as long as we stay above this low today, chances are we'll get a second leg up either today or early next week. Here we are 3 minutes into the bar, and the bar is not particularly big, and we're not on the high of the bar. So this is, today could end up being a quiet day. Also, we're in the middle of yesterday's range. Today might be an inside day. Traders will look to see how it responds to yesterday's high and low. For example, if it sells off on the open, yet reverses up from above yesterday's low, traders will look for it to test yesterday's high. And if it gets up to yesterday's high, it might reverse down from around yesterday's high. That's how inside days work. They open within yesterday's range, and then they trade to one extreme, fail to break it, and then reverse and go to the other extreme. Bulls not getting a good buy signal bar. The bears are hoping that we're getting a gap down below the trading range and a bear trend below yesterday's low. I still think the dominant feature is this bull breakout. We're testing the breakout point, 32 high, and we're testing again last week's low. However, this it's not doing what the bulls want, and it's not doing what the bears want. Sometimes when you have a trading range and then a big breakout and another range, the market fills in between the two trading ranges and forms another trading range, with the bottom of the range being around here and the top of the range being around there. Doji bar, which is the trading range bar, typically buyers below, sellers above, and we're just below resistance and just above support. Probably sellers just above the 78 low and around the moving average, and probably buyers just below the 32 high and above the 36 low. Are we always in long or short? Too early to tell. I still think it's more likely this is a pullback from yesterday's strong reversal up, and therefore we're probably always in long. But the big gap down, the doji bar below the moving average, this is not strongly bullish. The first bar is not a good looking buy signal bar. If bar 2 closes on its high, theoretically, if you're trading always in long, you would buy above the 2 high, but there probably are sellers around the moving average. This is not yet a trending market. Can you sell below 2? If it has a bull body, I would not. This looks like a limit order market, but it looks like we're probably going closer to the moving average. Can you sell with a limit order at the moving average? Math is probably okay, but this looks like a higher low major trend reversal. Bear trend, we have higher lows here, and now we're getting another higher low here. And it still looks more like a pullback from this rally than a pullback from a sell-off. So it looks like a pullback in a bull trend, and not this as a new bear trend, and this is a pullback in the new bear trend. Limit order bears sold the 1 high. They sold more 1 or 2 points higher, and we'll find out if they'll make money. They probably will, because we're in the middle of yesterday's range, and we have a doji bar for the first bar, and there's resistance just a little bit above. So you have to assume that limit order bears will make money. Okay, always in long, a very good bull bar. Bulls will buy above 2, but I still think we'll come back below the 1 high, even if we go up to the moving average. Bears trying to prevent the buy signal from triggering. Remember, bar 2, if you think of this as a 10-minute bar, the 10-minute bar opened here and closed here, so it's a very strong looking 10-minute bar. So somebody trading the 10-minute chart sees this bear trend, bull breakout, strong minor reversal up, and now a major reversal setup, higher low major trend reversal. So 10-minute chart looks pretty bullish. Okay, testing the 1 high. Should be bears buying back shorts at the 1 high. Bulls know that, so some bulls will buy there as well, and some bulls will be buying around a 50% pullback, which is right there. The bulls want to prevent 3 from dipping below the 1 high, because they know bears sold above 1, and the bears are trying to buy back their shorts at the 1 high. If the bulls can buy just above the 1 high and prevent the bears from making money, the bears will be trapped and forced to buy back their shorts higher. But odds are, we're in the middle of yesterday's range. We have a doji bar for the first bar. Odds are the bears will make money. For the bears, 3 is a pullback from the breakout below yesterday's range. But 1, the bears did not get a bear body, and 2, we have a big bull bar closing on its high. Therefore, this is not a high probability short. Trading range, right? Sellers above 1, sellers around the moving average, sellers around the 60-minute moving average, sellers around yesterday's close, sellers around yesterday's high, and buyers below, around the 32 high and the 35 low. and yesterday's low. Bulls keeping the gap open, so some of the bears are buying back their shorts. The bulls are trying to trigger the 10-minute buy by going above the high of 2. Do I still think we're going to drop below the 1 high? I do. I think even though this is a 10-minute buy and we're always in long, we're in the middle of yesterday's range. The first bar is a doji bar, and we're still right below the moving average. If you have to be trading always in long, you're long. You bought above 1, you bought above 2. Six ticks above 2, so you got some, and you're getting hesitation, so that means some of the bulls just scalped for 1 point. Bar 3, the close of the 15-minute bar, and that's a good-looking bull bar. Opened here, closed there. 15-minute bar, a pullback testing this support, the breakout point, and last week's low. But you have to remember we opened in the middle of yesterday's range, and therefore the bulls are not nearly as strong as they could be. Why did we not open above all of this resistance, above the trading range, above yesterday's high, above the 60-minute moving average? The reason why we did not open up there and rally from the open is the bulls were not strong enough to do that. So you have to look at this rally with suspicion. What about those 1 high bears? I still think they're going to make money. Obviously, we have 4 bars without a bear body, so the math is not great for the shorts. But the location is good for the bears, testing the moving average and other resistance above yesterday's close, yesterday's high, 60-minute moving average. And the bull bars are not particularly big here. So not a great location to buy. The bears have not done enough to make traders sell, but the bulls are not doing enough to make a lot of bulls want to buy at the high, to buy closes. Four-bar bull micro channel, so buyers at the 4 low. Sell it. The bears still are selling up here, but they're probably buyers here. The bears might need a micro double top. 4 bars with higher lows and no bear bodies. Outside up and another gap, the 5 low and the 2 high. Bulls trying to get up to the next resistance level. So far, no bear body for the first 5 bars. That's good for the bulls. Another gap, 5 close above 4. Location, bad for the bulls, and the bars not being particularly bad for the bulls. So a lot of traders are ahead. I'm buying, I buy the 4 low, right? But I'm not buying above bars and I'm not buying closes. Bears trying to get a bear IOI. First close above the moving average. Bears do not want the bulls to get 2 closes above the moving average. For the bears, they want an opening reversal down from resistance, the moving average. On the open, this is a pretty strong rally, but on the open, 50% chance, no matter how strong a rally is, it's going to reverse. So 50% chance we're putting in an early high of the day. Bears do not want to sell unless they get a bear bar closing on its low or near its low. So if 6 closes near its low, at minimum, the bulls will get out. It's a second entry sell at resistance, but with 5 bull bars, it's not a very strong sell. Bear IOI, but big tail. So not a great stop entry sell, but I think we're going lower. And 6 is an inside bar and a bull trend, so it's a high one bull flag, but a bear body, and we're getting a bunch of small bars losing momentum at resistance. So not a very good looking buy. Still always in long. I would not sell below 6, even though it's an IOI, so a second entry short. If 6 closed on its low, I'd be more interested in selling below its low. But I would get out of longs below 6. Let's say 7 closes on its low. What about selling below 7? That would be a higher probability sell than selling below 6. But what's your theory? Is it simply an opening reversal down from the moving average? With 5 bull bars or 5 bars up, I'm calling this a bull bar, but certainly 4 bull bars. It does not look like a very reliable sell setup, and therefore, if we do sell off, it'll probably be a minor reversal, probably buyers around the midpoint, around the 1 high and a 50% pullback area. Double bottom, 5, 7, but now we have 5 sideways bars here, 4, 5, 6, 7, 8. Not a good looking buy setup, and you can see there were sellers at the 7 high. So limit order trading, they bought below 6, they sold above 7. Getting vacuumed up to the next resistance levels. 60-minute moving average, yesterday's close, yesterday's high. Bulls want to trigger the buy signal on the daily chart. However, there's a lot of overlap today, yesterday, that reduces the chances that we're going to break strongly above yesterday's high, increases the chances that we'll go maybe a little bit above yesterday's high and then sideways. Here's a buy signal bar, not much overlap. Here we do have a lot of overlap. Buy signal bar, a lot of overlap. That is March 5th. This is the buy signal bar and some overlap of the prior day, and we just traded up relentlessly. I think this is a stronger rally than what we have today, but let's see if we start to get a series of bull bars above the 60-minute moving average. If so, today could end up being a strong bull trend day. at resistance, top of the trading range, 60-minute moving average, yesterday's close, possible buy climax bar, but a lot of traders will be hesitant to sell below 9 unless it's a decent sized bear bar, basically a second leg trap type of sell. So this kind of thing, you want a bear bar closing on its low. Here you got a bear II, and traders sold below that bar or below this bar after a bull breakout bar testing resistance. Bullback's high, just a little bit above. So a little bit of another magnet up there. Very close to triggering the buy signal on the daily chart. Got to get above yesterday's high. Important price. Remember I said that today could be an inside day because we opened in the middle of yesterday's range, and therefore the bears will try to get a reversal down. But when a channel looks like this with only one bear bar in the first 9 bars, unlikely to get a swing down without going sideways for at least a few bars. So not much downside risk right now. Possible variation of a second leg trap, 1 pullback 2, top of a trading range. If 10 closes near its low, I would get out of longs below. 60-minute chart, we have another 12 minutes before the bar closes, and the bulls so far have a good-looking bull bar, but at the 60-minute moving average. For the bears selling, taking a chance, it's the high of the day. Unlikely to go straight down. If it closes on its low, the math is okay. It's one of those low probability, big reward types of trades. So you sell below 10, knowing that you'll probably lose money, but maybe 25, 30% chance you'll be picking the high of the day, and you can make 20 points, risking 3 or 4 points. Low probability sell, but okay for the bulls to get out and look to buy again on a pullback, which might be down to the 8 low moving average. Daily chart trying to trigger the buy. NASDAQ did trigger the buy. So NASDAQ get a high 2 buy after a reversal up, still in a tight range. So the bulls need to break strongly above this range over the next few days for traders to believe that we're going up to the all-time high. For the bulls, a high 1, a pullback and a bull trend, but a bear bar at resistance. Yesterday's high, 60-minute moving average, not a strong buy. Right now, the market is deciding how the 60-minute bar will look when it closes in 10 minutes. Will it close on its high? Will it close above the 60-minute moving average? Will it close above yesterday's high? Or will it have a tail on top? Will it close below the high? If we do go above yesterday's high and then reverse down, we have an expanding triangle. 1, 2, 3, or 1, 2, 3. High 1 bull flag, but at resistance. So might be more sellers than buyers above 10. I would get out of longs if we reverse down below 10 the next bar or two, and then wait to see what we get. Triggering the buy signal on the daily chart. It's pretty common for the market to trigger a higher time frame buy signal and then pull back for a lot of bars, 10 bars, 20 bars, and then trigger the buy signal again later in the day. So it could still be very bullish even if we pull back for an hour or two. No sign of a top, big gap, 5 high. Measured move up is up there. There was a high one bull flag here, a wedge bull flag, but I did not take it because it's in a micro channel, so I missed this one. End of the first hour, big outside up bar. Qualifies for parabolic wedge, rally, bear bar, rally, bear bar, rally. Parabolic wedges very often are very, very strong, but lead to, often, not always, but often lead to big reversals. A lot of times they lead to a bull flag, and then you get a bear breakout. Parabolic wedge on the open, rally, pause, rally, and that was it for the day, sideways for the rest of the day. This is similar to today. Rally, pause, rally, pause, rally, pause, rally, pause, sideways for several hours. This is the one that's most similar to today. 5 bars up, pause. 2 bars up, pause. Rally, pause. Bulls get out below either a bear bar here or a bear bar closing on its low. Aggressive bears sell here, looking for a couple legs down. But usually you don't get that. Usually you get this, sideways to down in a tight trading range and a limit order market. Can you buy closes up here? I would not. This is a series of buy climaxes. Here, pause, here, pause, here. Unlikely to continue up much longer like this. 60-minute outside up bar. Theoretically, there'll be bulls who will buy above a strong bull bar, but 60-minute chart, you often get a one-tick trap. It goes one tick above the high of the bar or one tick below the low of the bar. Okay, bulls got their breakout above the 60-minute bar, but because of the nature of this rally, I think this is going to end up as a parabolic wedge rally, and that will get an hour or two of sideways to down trading pretty soon. We still have that measured move target above. Bulls tried to rally, they failed. They rallied again, pulled back. So we're at the top of a possible wedge channel. similar to what we had earlier this week. Got a couple hours or a few hours sideways to down. Strongly bullish, but risk of a parabolic wedge rally. We still have room to that target. So right now I think we'll get there, but I don't know if we go much above it without pulling back for an hour or two. Good location for bulls to take at least partial profits. Parabolic rally to measured move target in top of a channel. To short, I don't know. I think we're going to get a pullback, but it's too early to short. Bear bar, if it's a bear bar 15, I would get out of longs and wait, because this is climactic and it's unlikely to continue indefinitely like this. We're probably going to start to transition into a trading range. Market's ignoring that measured move target, so I'm going to ignore it as well. The next target would be this. Measured move based on this gap. I would get out of longs here and then wait. We're probably going to switch into a limit order market. It's possible we can do that. Not likely. More likely to be something like this. Can you short and put a stop above 16? The math is really not all that good. It's unlikely that we're going to fall all that far. Do I think it'll be profitable? Yes. But just because something probably will be profitable does not mean the math works out for taking the short. Because if you're going for a 1 point profit and risking 2 points to make the 1 point, you have to be 70 or 80% certain, probably 80% certain of making the 1 point profit. And I don't know that this is 80% certain. I think it's 60% certain, but to risk several points to make 1 point, 60% is not good enough. I would get out of longs at the market. If you want, you can get out below 16. Do you have to get out? Well, one of the problems with parabolic wedges is about 40% of the time you get a reversal. About 40% of the time you get a bull flag and resume up. And the rest of the time you just kind of wander around sideways indefinitely. So similar to today, very strong rally. Sideways here for several hours. Here sideways for about an hour, another leg up, and then sideways for several hours. Strong rally sideways. Sometimes you get a parabolic wedge top, a little pullback, another parabolic wedge top, and it just keeps going up. But this is our future. And I don't know if it's starting now or soon. Here, this was never as climactic as today, and it just kept going up all day until the end of the day. Parabolic wedge rally, and this is what the market transitioned into. Parabolic wedge rally, bull flag, another rally, and then that. So you got to assume that we're going to start to transition into some kind of a trading range for the next hour. All right, so a pullback, 16, similar to 10 and similar to 6. Are you going to buy above this as a high one bull flag? I would not. $26.50 is a big round number. That's also a magnet, but I would get flat below 16 or at the market. Can the bears sell and put a stop, maybe a point above 26.50? I don't know. If the bears sell, they probably need to use a wide stop. They're betting on a limit order market. And limit order market means better to be selling with limit orders using wide stops and scaling in, and buying with limit orders using wide stops and scaling in below. So bears sell above bars and bulls buy below bars, and they switch to scalping. Here, the reason why I think this is not like today is we have far more prominent tails in this rally than what we have today. And we've got a tight trading range here with a lot of tails. Today is more strongly bullish. You know, a lot of the bars with no tails. So this is comparable to today. I won buy, but I think you're only taking that buy if you're using a wide stop and scaling in lower. Too many pushes up, 1, 2, 3, 4, and now you're hoping for 5. The sell climax high is also a target for the bulls. They're trying to totally reverse that sell-off. The market's ignoring this, so I will ignore it. For the bears, parabolic wedge, micro double top 16 and 18. If 18 is a decent bear bar, 3, 4, 5 tick body closing on its low, it's probably an okay scalp for a short. For the bulls, it's a high one bull flag 17, but I think most bulls will switch to scalping because they know that this is too far, too fast, and that is not a great scalp. If you're thinking the market's entering a tight trading range, do you want to be buying at the top of anything? Limit order bears who sold the 16 high made money. Stop order bears 18. This is the problem I was talking about, that the math is tricky because you're risking 3.5 points to make maybe 1 point, and you have to be right 90% of the time to take that trade. I think it's probably a 70% chance selling below 18, but not 90%. And you can see limit order bears who sold the 16 high made money. Even the bears who sold the 17 high, arguing it's a bad high one buy, made money. Bulls trying to prevent the market from falling below a decent bear bar because they know once it does, a lot of the bulls will switch to scalping, and they'll be unwilling to buy high. I think a lot of the bulls are already unwilling to buy high. The 15 close, we got a bear bar. 16 high sellers. 17 a high one buy sellers. So bulls are going to switch to buying pullbacks instead of buying closes and buying above bars. We have that 26.50 big round number a little bit above, so we might have to get there before we enter the tight trading range, but we're probably in the early stages of a tight trading range right now. 1 minute chart. It's a bull flag at the moving average 20 gap bar buy, but I'm not taking it. We're starting to form a tight trading range. I like high 1 and high 2 bull flags in bull trends. Sometimes I take them, sometimes I do not. This one I did not take because of an 8-bar bear microchannel. So you end up having to buy at the market or buy closes or buy below bars. Bull's trying to prevent it from falling below 18, but I think it's going to fall below 18, whether or not we go a little bit higher. And I think we've probably entered a tight trading range. So no more breakouts. What happens if we get another breakout? It'll probably fail on the next bar. It's funny, right at the end of bar 19, it went below 18. Bull's hoping to get to 2650, big round number. I mentioned yesterday that we traded below last week's low. This is the weekly chart, and today's Friday, and that there was a small chance we could get all the way back up to last week's high or this week's open. Still possible. I don't think it's likely. It's another 30 points above where we are, and that would be, I think, very unlikely. The bears are still on their sell below 18, and they're trying to prevent the bull flag above 19 from triggering. 6 sideways bars now, so we're starting to form a tight trading range in a limit order market. Nobody wants to buy above, nobody wants to sell below. You can see they bought the 18 low. We got a double bottom 16 and 19 and a bull buy signal bar 20. The bulls were buying, hoping that we get one more breakout, one more buy climax, and we might. But I think if we do, it'll be the final one. So either we've entered a tight trading range now, which we have, or we get one more leg up and then start to go sideways for the next couple of hours. It's probably going to last at least an hour. The bears need a breakout, so they want a pullback. It's a bull flag for the first 5-10 bars. Once you get to 20 bars, it starts to get a 50-50 chance of a bear breakout. At this point, you got a 40% chance of the bear breakout. And once you get the bear breakout, if you get it, then you got to be thinking that we're now always in short and we're in for a swing down. Do I think we'll get the reversal? Well, at best you have a 40% chance of it early on, and we don't even have this yet. This is more likely. Not necessarily for the rest of the day, but for an hour or so. We're not going down. We're doing this. Looks like more sellers above 20 than buyers. Limit order trading just like above 17. When it's entering a limit order market and you have a small pullback bull trend, whether or not it's a parabolic wedge, usually if you're choosing between buying below a bear bar and selling above a bull bar, it's better to be buying below the bear bar. because there's not much chance of a sharp reversal down, but there might be a 20%, 30% chance of one more sharp leg up. But even if you sell the 20 high and you get a 4-point rally, it'll probably come back to the 20 high. So if you can use a wide stop and scale in, you still probably will make money. I'm going to look at ticks during this rally. Extreme buying, so we probably had extreme ticks. Ticks got to about 1,000 here, and that's usually not going to be the final high in price. Here's ticks 1,000, going a little bit higher, and then it looks like a little bit higher still over here, but fewer stocks participating. Volume getting less as well. So here's the tick high right here, and the volume, the high volume is a few bars later on the 1-minute chart. Then another rally, but fewer stocks going up, and total volume is less. Another leg up. Ticks still less than over here, and volume is less as well. So traders are getting less interested in buying as the market's going up. Bulls trying to get above 2650, and they want to make any limit order bear give up. So they're hoping to get another breakout, but probably not much more up. When you get these parabolic wedges that look like they're topping out, and then the top fails and you go up, usually you just go up for one leg and then get another pullback. Here, parabolic wedge, you got a leg up for a few bars, another pullback, breakout, pullback. You start to transition into a trading range. Now I got to redo this one. Breakout, then pullback. Went up for 3 bars. We still have that measured move target above. $60-minute chart, you see that line right there? That's the daily moving average plotted on the 60-minute chart. And you can see we're getting close to the daily moving average. Here's the daily chart, 20-day moving average near it. So far, a very good bull day. Loss of momentum, but still always in long. You can see we tested the 2650 big round number, and we still have a target above. And then we have Wednesday's high. The bulls would like to get there. They might. More important price is the open of the week. I do not think we'll get there. That's still another 25 points above where we are. And as strong as this is, I doubt we're going to go up 25 more points, especially after a parabolic wedge, which usually leads to exhaustion. Bull flag, big breakout. Bull flag, big breakout. Bull flag, no big breakout. Bull flag, no big breakout. Bull flag, no big breakout. So it's still always in long, but losing momentum. I want to make sure I have this measured move drawn in accurately. Okay, pretty accurate. So 24, 54.75. We don't have to pull back at the target, but I suspect that we probably will. Very small pullback on bull trend day today, so unlikely to get much selling. The best the bears probably can hope to get is exhaustion in a trading range here or here. We got to within a tick of the measured move, and that's close enough for traders to believe the measured move has been tested. We've also rallied for 4 or 5 bars from a tight trading range, which is about when you get a pullback. So even though it's still by the close, I would buy a pullback. I would not buy closes up here. Bulls, I'd get out of longs below 26. Parabolic wedge, get another leg up, and we got that afterwards. Parabolic wedge tried to top, got another leg up, and got this afterwards. Can you buy the low betting on a tight trading range? I would not. This is a possible final flag, another buy climax. I would wait at least a few bars before buying it again. And for the bears, they have the issue of math, like shorting below 18, right? Even if the probability is good, the risk is bigger than the risk is bigger than the reward. Excuse me. One-minute chart, 6 bear bars, so probably at least a small second leg down. So 1-minute chart is sell to close, even though we're at the moving average. Would I sell down here? No, I would not, but they might sell a lower high. Bulls, another high one bull flag, pull back after another leg up, but I would wait for a high 2 or for 4 or 5 bars, 10 bars, or buy with limit orders below bars. But for stomp order buys, I'd wait for at least 5 bars, more bars. Not enough bulls willing to buy above 27. High one, but a series of buy climaxes. And Doji 27, bear bar 26. Probably doing this. How big a reversal can we get? We can get a huge reversal, right? Right now, it's more likely that we're going to go into a tight trading range. This could be a small final flag, so it's low as a target. Moving average is a target. Remember I said we had those 6 bear bars on the 1-minute chart, and therefore probably sellers above for at least a small second leg down. And the second leg down has pretty good momentum as well. can see the reversal down here is a bear bar and then a bull bar. So not strongly down. Here we got 1, 2 bear bars and then 3, 4, right? So this is what we might be doing. Just looking for things to illustrate a point. This is kind of like what we have, potential final flags, strong leg up, and then surprisingly big bear bars. And if you get 2 or 3 big bear bars, it's a give up bar situation, and you probably get at least a small second leg down. This was very unusual to get such a big leg down. And after such a big leg down, it was very unusual to get strong continuation up. However, the point is, if we get 2 or 3 decent bear bars, it represents bulls giving up, and you usually get the second leg sideways to down. Bull trend, surprise bar, second leg down. Here we got a third leg down. So surprise bar, right? Are bulls going to buy above 29? Probably not. But when you get these surprise bars, sometimes you get a bounce all the way up to the 28 high before you get the second leg down. But the odds are probably 60% that this is the first of 2 legs down, that we'll get at least 1 more small leg down. So not a good buy, 29. It's comparable to this. You know, we sometimes go up near the top of the bar, another surprise bar and a bull trend, got all the way up to the top of the bar, but got a second leg down, then a third leg sideways to down. When you get a correction in a biclimax, first target is the bottom of the biclimax, which right now is the 22 low or the 20 low, and might get a couple legs down there. Usually corresponds to around the moving average. Usually when you have a very tight channel and a parabolic wedge, the first reversal down does not result in a bear trend. But you can get a conversion into a trading range. Here, 3 bear bars, expect a second leg down. Here we got a third leg down. So this might be sideways until 11:30 or so. Okay, 4 bars down without a bull body. 27. 27 has a small bull body, but 2 decent bear bars. Probably a couple legs sideways to down. Sellers above 30, sellers above 29, and entering a trading range. Usually, strong bull trend does not go into a bear trend without first transitioning into a trading range. So not much risk of a big sell-off, but probably a second leg down. You can argue we've had 2 legs down. 27, we went up and then down here. But I think 28 is a surprise bar, and we'll get a second leg down after 28, 29. Can you buy above 30 if it's a bull bar? I think you're only buying above 30 if you're putting a wide stop, maybe below 16 or so, because the odds are there are sellers not far above. Top of the surprise bar, probably sellers right around here. Bulls want a strong breakout, but more likely we're in the training range. Buyers or sellers above 26? Probably sellers above. On the 1 minute chart, this is a strong minor reversal. 1 minute chart, bull trend, strong minor reversal, and therefore the bears will try to get a major trend reversal on the 1 minute chart around the prior high, a little bit below, a little bit above. 5 minute chart, clearly strongly long, but big enough bear bar 28, probably a second leg sideways to down. It should not have gone 2 ticks above 28, and if it goes 1 tick above, you still get the second leg down. Well, once you go 2 ticks above, I think the probability is no longer 50%. It's less than 50%. Market trying to totally erase Wednesday's sell-off, trying to get above Wednesday's high. And as I said, I doubt that we'll get all the way up to the open of the week, which is way up here. I think the best the bulls can do is, get up to around Wednesday's high, and then maybe enter a trading range. I say that, right? If the monthly chart is resuming a bull trend, let me go back to the monthly chart. If the monthly chart is resuming a bull trend, you'd expect the weekly chart to start getting bull bars, and you'd expect the daily chart to start to get series of bull bars, 3, 4, 5 consecutive bull bars. You can see sellers 26 high, limit order bears, scalping. I was talking, I probably would have sold that for 1 point scalp, and I missed it. I don't know if my mic was on. The bulls are not buying this breakout. They bought the breakout above this, and we got that. But I suspect the bulls want to buy pullbacks. And you can see there were some sellers at the 26 high. I think this is not going to be the high of the day. I think we're going to get up to Wednesday's high. Here's Wednesday's high. So we're totally reversing the sell-off. The bears will try to get a double top up there at Wednesday's high. More likely, this is a resumption of the bull trend. A big high 2 pullback, leg 1 pullback, leg 2, and leg 2 subdivided into another high 2 bull flag. Always in traders, I think reasonable to get out below 18, and they have to buy again either above 20 or a second entry buy above 22. They get out below 26, theoretically they have to buy again above a bull bar. 30, I would not, that's too high. I would wait for a second entry buy. $28 surprise bar down, 30 surprise bar up. So odds are we'll get at least a small second leg up. So a lot of bears are not willing to sell below 32, despite a double top, a higher high double top. This is a common pattern where you have a breakout 30, 31, and then you have a reversal 32. And traders are wondering, is the reversal going to be successful, or are there going to be more buyers 32 low than sellers and then second leg up? It's reasonable to have shorted the 29 high, and therefore I think we're going to pull back to the 29 high. However, 30, 31 is a surprise, and the odds are we'll go up at least a little bit more. So probably buyers 32 low, buyers 29 high, and at least a little bit more up. Not a good stop entry sell below 32, even though there's a magnet below, and not a very good stop entry buy above 33. Always in long, probably going up a little bit more, but might test the 29 high first. 3 dojis, even though it's a bull flag, not a lot of bulls buying at the 26 high. It looks like we'll probably go a little bit higher. I don't know how much. And then test down to the 30 biclimax low and the moving average. I'm always interested in the most recent biclimax low. That's always a magnet. If a bull trend is going to convert into a trading range, you want to see deep pullbacks down to around the bottom of the most recent biclimax low. One minute chart. It was a high two buy. I bought it. I bought more lower, and then I get out, break even on the first. So I'm back to flat. Because that sell climax high was such a dramatic event, and the reversal is so good, we should get up to that high, maybe a little bit above it today. The bears will try to get a double top with that high. They'd like to break below the neckline and fall for a measured move down. I think it's more likely that even if we go sideways for a couple of days here, I think it's more likely we'll break above and then start going up to 2,800. Near the end of the third hour, 3 consecutive bull bars today and 5 yesterday, so that's 8 consecutive bull bars. Here we had 9 or 10, and usually you end up, you can't get 20, 30, 40. You know, that's never happened before. So at some point you start to get bear bars, which means you start to go sideways. And we have resistance here, the top of the sell climax, and the 60-minute, the daily moving average. So we're in a zone where the market might go sideways for a day or so. You know, in other words, tomorrow, Monday. Bears selling 32 high, wedge 26.32. Less willing to sell below 36. But if it closes on its low, then it's like 26. I think the bulls will get out again. The limit order bears is sold 32. I don't know if you can see, but it fell 4 ticks. So they're buying back their shorts. It had to fall 5 ticks for them to make a profit. So that's bullish if the limit order bears cannot make a profit selling the prior high. Important magnet, a little bit above. It does not matter that it's not going up strongly. It's going up, and it's impossible for bears to make money. So either you buy or you wait. So you have a nested wedge, 32, 36, inside of a bigger wedge, 18, 26, but the pullbacks are so small, I would not take the short. You know, look at the size of the bars. You know, the bars are tiny, and it makes it very difficult to make money selling. Bulls, if they're buying, to me, if I take one buy early on and then I just let it go because it's probably not going to go very far. Can we get a big reversal from this? Not likely. Nested wedge, yes, but look how big the pullbacks have been. You know, the pullbacks have been very small. If we get another give-up bar like 28 or bigger, then I think traders will look to sell again. A high one, but no energy. You know, it's essentially a tight trading range for the past 8 or 10 bars here. Bears might start selling above bars, right? Since the Bears made money selling with stops below 39. Also, as I said, I doubt we're going to go much above Wednesday's high. On the 60-minute chart, looks like a very important price. It led to a huge sell-off. We're near the start of that sell-off, and theoretically, the bulls who bought up here hoping for a rally, and if they held, they're relieved that it's back to their original entry price. So you have bulls who will be trying to get out, break even. So you'll have bulls selling here. There are other bulls buying, betting on the breakout. But a lot of bulls who bought here hoping for a rally are happy and relieved to get out, break even. Some of them bought more lower. But in any case, you know, we're in an area where bulls will be selling. And the bears know that, and the bears will be selling as well, especially since they know when the price was here earlier, we got a big sell-off. The bears were able to take control. Most likely, we're going to do this. We'll start to go sideways. Look at the size of the bars on the 60-minute chart. Big, medium, small, smaller, right? So the rally, even though it's very strong on the 5-minute chart, the momentum is getting less. So instead of a strong bull trend, we're probably transitioning into a trading range, a tight range. And we may stay that way for the rest of the day. The bulls, I think, have achieved the only goal they can get today, and that is break above yesterday's high and triggering the buy signal on the daily chart. It's unlikely that we're going to get all the way up to the open of the week. And therefore, they're satisfied to achieve what they have achieved. Probably buyers below at the moving average. We have a spike pullback channel, so buyers at the 34 low. We have a buy climax 30, so buyers down here. If we do get a sell-off, I think the bears will have a hard time getting below 30, and the best they'll probably get is a trading range with the 30 low as the bottom of the range. I won, but I'm going to let it go. This is nested wedge 1, 2, 3, 1, 2, 3. Probably at least a small second leg sideways to down, a couple of legs sideways to down to the moving average and the 34 low. What about the target above? I still think we'll get there, but we have a lot of time left to the day. So I suspect we'll pull back more sideways to down and then try to get there later in the day. Strong trend from the open bull trend, small pullback bull trend. Spent hour sideways, closed near the high of the day. It's rare to get a trend as strong as today's is, and here, very strong, but pullback, middle of the day. Strong trend, pullback later in the day. This is comparable to today. I'm putting the stronger ones at the top of the list. I'm going to have some duplicates. Let me check. No, I don't see any. So far, this is the most similar to today. Here, a lot of tails and dojis. And if you have a small pullback bull trend day and you have a lot of tails and dojis, the market does not get as exhausted. It's not, it's pausing all the way up. And today we do not have that. Today we have, I think, more exhaustion, more big bars, and increases the chances that we'll get a bigger pullback sometime after 11 o'clock. Here, a lot of small bars with tails. We're starting to get it here, but we had so much big stuff right here that I think the market's probably more exhausted today. Because of all of these bars being sideways and small, even though we're still always in long, there's not much chance of a strong bull breakout like this. Also, we're in that middle third of the day, 9:30 to 11:30 or so, when the market tends to go sideways. The bars are small like this. It's limit order scalping. So I buy at the low. Sometimes I sell at the high, but I buy at the low and I scalp out. So I'm back to flat. I do think we're going to get a bigger pullback, and it looks like we may go for one more push to another wedge. Strong trends constantly form wedges. We had a wedge here, then parabolic wedge 1, 2, 3, 4. And then, wedge here, and wedge here, wedge there, 1, 2, 3. That's just the nature of trends. They're constantly forming wedge tops, and they all fail. I do not think we're going a lot higher today. I think, we've seen the move, and the target is Wednesday's high, which is that red line. We may go a little bit above it, but I bet I don't think we're going to go a lot above it. Stop entry sell, but I would only take it if I could put a stop up here and scale in higher. The bull C44 is a breakout, and 45, 46 is a pullback. Limit order bears are making money, selling above things, even selling above 26 and then selling above every high, selling above 39. Stop order bears have made money 26 and 38, but still think it's better to be trading with limit orders. Even though it's a breakout and a pullback, I would not buy the 45 low because it's a bear bar closing on its low. And the bears have made money twice with bear bars with stop entries. That was the goal, to get above Wednesday's sell climax high. I don't think the bulls have to get much above it. The next target is up here, and they will not get there today. And therefore, we'll probably stall somewhere around this high. Nested wedge. The odds are we get a bigger pullback sometime today. Normally it's after 11 or 11:30. Nobody wants to sell with stops. The last 3 or last 2 were losers. We had 2 winners, but loser here, loser here, loser here. a 1 minute high two, but I'm not buying it. I'm getting too many decent bear bars, plus the 5 minute chart has a second entry sell. I like to buy bull flags and bull trends, but I think this is near the top of the developing trading range, and that will test down to the 40 low, maybe the 34 low at some point in the next hour or so. On a day like this, everything looks good. Banks, Apple, Amazon, ExxonMobil. You can look on the screen, most things are green, and that tells you that most sectors are up. Very bullish day, an important day, because one of these reversals is going to be the start of the move up to the all-time high, and this is a good candidate, a high two and a triangle. For the bulls, another pullback and a bull trend, but too high for me to buy at the top of a channel that looks like it'll evolve into a trading range. So if you're buying at the top of a channel that's going to become a trading range, one of these buys is going to be the top of the trading range. You can buy it, but you probably need to stop down here and you have to be scaling in lower. Micro double bottom, big problem for the bears. In general, if you get a high two or a micro double bottom and you're short, you got to buy back your shorts. I would not short below 48 regardless, because it's a small pullback bull trend, and if you're shorting, you should be selling with limit orders above bars, not with stops below bars. Sometimes you make money, like below 26 or 39, but overall, I think the math is not worth it. This is not a great high two buy. Tight trading range for about 15 bars. But if I had to do anything, I'd buy. The bulls who get out below 45 or 48 have to buy again above a bull bar, especially with a micro double bottom. I'm debating whether or not I should have bought. I probably should have, but I did not. And all of those small bull trends and trend from the open, let me go to the small pullback bull trends. All of the small pullback bull trends all of the small pullback bull trends, even the ones that are extremely strong, there's usually some profit taking at the end of the day. Here, you had a pause in the middle of the day, and the day closed on its high. Today, we don't really have a pause at all. It's just a spike in a channel, and it's really climactic. Because of that, I think the odds are we'll get a pullback. Sometimes it does not come until the end of the day. This is the day that's most similar to today. It was small pullback bull trend just all day long. Got to the moving average, looks like around 11 o'clock or so, but the pullbacks remained small and it just kept going up all day. Let me see if I have any duplicates here. No, everyone is different, but this is the one that looks most like today, just straight up with no pullbacks. You can see tails becoming prominent, constantly looking like it's going to evolve into a trading range. Prominent tails right from the beginning, but it never went sideways for more than 5 or 10 bars and kept going higher. Remember yesterday I said this was a really important event, and when you get that many big bull bars, especially from an oversold market, you usually get follow through for at least one day, and it often is the start of a trend that could last for weeks. I have the wedge drawn, top of the channel drawn, but I don't think it matters that much. Bulls are trying to get another gap here. They're trying to trap bears. We had a gap here that trapped the bears as low as the 21 high. At this point, I think any gaps that we get, even if they're big, will close by the end of the day. Here, as strong as this was the last gap. I don't even know if it held open. Let me just check. You can see that this gap closed, and every other attempt at a gap closed all day long. Once you start getting gaps that close, that's usually it for gaps staying open. You know, early on they tend to stay open, like here. But once they start to close, traders start to sell above bars and scale in higher, betting that gaps will close for the rest of the day. Therefore, we're probably going to pull back below the 47 high, even if we go up a few more points. The bulls are hoping to get all the way back to the open of the week. Earlier, I thought it was not likely. Now, we're still 15 points below, and it's still probably not likely. And that could be a reason for bulls to take profits if they conclude that they cannot achieve their next objective. They'll just take profits. There's a little gap here on the 1 minute chart, and we're near measured move target. So from this low to this high, but it's so strongly up, it's really hard to make money selling. We'll probably pull back below the breakout point here, but not a great looking sell at this point. And to buy, I'm not buying this high up. The buy was 51 and I missed it. Sometimes I talk and it interferes with my ability to make decisions about trading, and I end up missing trades. No sign of a top, but too climactic for me to buy up here. That was a surge. Let me see what TIX did. TIX did not go to 1,000, but could be a climactic end of the move. This is a very unusual day. And it's consistent with what I'm saying, that it looks like the bull trend is resuming. And when the bull trend resumes, everybody's eager to get in early as possible because they know that there may not be much of a pullback for several days. We may just start to get a series of consecutive big bull trend days like this or like this. We have 2 hours left and 12 points to go to get to the open of the week. I did not think it was likely down here, but we're accelerating here. And there's probably a 40% chance that the bulls will achieve it. So 60% chance we will not get all the way to the open of the week. That's the open of the week, 2675. It's still buy for any reason, but I'm flat. I'm not willing. We're 5 or 6 bars up here, so I'm not going to buy that. If it has a bare body, I think those in bulls should get out again, even though it's unlikely that we're going to sell off very sharply. Sometimes you try to get a trap middle of the day. This is not a very strong day. I'm trying to find something comparable today, but today is so unusual. But sometimes you get this, like after 11 o'clock, you try to get a reversal, but usually becomes a bear trap and the bull trend resumes. Is that good enough for the bulls to exit below 57? I'm not opposed to it, right? We're so, this is so climactic that we could pull back for a couple legs. And we could come all the way down to the bi-climax low, but right now that's not likely without at least a micro double top up here. I think the people buying up here are the shorts being squeezed. I think the bulls would rather buy pullbacks. And at some point you run out of shorts, and then you run out of buyers willing to buy at the top of a bi-climax. Weekly chart, you can see that we have a big tail on the bottom of the week, and that's because Wednesday we had a very big bear bar, but you never know until the week closes. And instead of having a big bear bar, we're closing up near the open, creating a micro double bottom and a buy signal bar next week for a triangle and a bull trend. 3 dojis. You have to assume that we're in breakout mode, and that one of these weeks we're going to get either a big bull trend bar or a big bear trend bar. Right now it's more likely that we'll get a big bull trend bar, which means next week might be a week filled with bull trend days. Another high 1 bull flag, but a buy climax, 2 dojis, 3 in the past 4 bars. So too far above the average price for me to buy. Probably sellers not far above, but when a day looks like this, it's really hard to make money selling. Also, the bulls, I think, have a realistic shot of getting all the way back to the open of the week. It was unlikely down here, but now we're only 10 points away, and we have almost 2 hours to go. It's been a long time since we've had a day this strong. This is really, really unusual. I'm flat right now, but this is an extremely strong day. Very good day for the bulls. 60-minute chart, big high 2, and a lot of bull bars overbought, but the context is so good for the bulls. Monthly chart, this is the 4th month of a pullback after an extremely strong bull trend. And I said I thought the pullback would end in 1 to 3 months. Well, we've had a 1 month pullback, and the other 2 months stayed above that low, but we've been sideways for 4 months. So it's a 1 bar pullback and then sideways. and weekly chart triangle, but now a micro double bottom. Odds are triangle and a bull trend, bull flag. There have been no pullbacks in about an hour, so not worth shorting, and it's too high for me to buy, too climactic for me to buy, so I'm trapped out. If it closed on its low, I think it's all right for bulls to get out below. But when the pullbacks are non-existent, just a few ticks, it's very hard for the bears to make money. So okay for the bulls to, step aside and wait to see if we get some kind of sharp reversal. But I think it's really hard for the bears to make money. Just look at the past 30 bars. 1 bar pullback. We had 2 bars here, but only a couple ticks. A couple ticks, couple ticks. Very, very hard to make money as a bear. $60-minute chart, 10 consecutive bull bars. Really unusual. So we should get a bear bar. Here or soon, but it doesn't matter. The odds of any kind of a significant pullback are small. So climactic, we might get bulls taking windfall profits and stepping aside for 5 or 10 bars, a couple legs sideways to down. At some point, you run out of people willing to buy at the high. And most of the people buying in here, I think, are bears getting squeezed out. Most bulls want to buy pullbacks. High one again, 62, but too far above the moving average, and this is too climactic. So I would wait for a couple legs sideways to down before buying again. This is as strong as a bull trend ever gets. Very rare to get one this strong, but I think it's very important because I think it's telling us that the bull trend on the daily, weekly, and monthly charts is resuming. I was talking about going back to the open of the week. The open of the week is not far below last week's high. This might be an outside up week. We may even close above last week's high, which would be another sign of strength. Monday, we might gap up. If everyone decides that the correction has ended, Monday we could gap up and start to get a series of bull trend bars, start to do this. They don't have to be big, but if every bar is a bull bar, then we're probably going higher. We may pause here and then wait for the final half hour and try to get above the open of the week. It's always possible that we give up at the end of the day, but I don't think we will. I think that this is one of those days that just keeps going up and up and up. Small pullback bull trend all day. Here we get some pullback. Small pullback bull trend all day. This is the one that's most like today so far. But if we get a pullback, it'll change. But right now it looks like that. second entry short, I would get out of longs, but I would be looking to buy a couple legs sideways to down. We're so close to the open of the week that I think we have a 50% chance of getting there in the final hour. I want to make a point that I haven't specifically said. When you have exceptionally strong small pullback bull trends, you can get attempts at reversal. Here, 3 bear bars, but they usually fail. Here, we had potential final flag, and the bears got some selling at the end of the day. If you're long, you'd get out below a bear bar or on the third bear close, especially at the end of the day. However, when you get really strong small pullback bull trends, usually you do not get any kind of significant reversal. I had one example where we had a big one right here, but even then they bought it. Moving average gap bars, gaps between the highs and the moving average. Right at the end of the day, this is 3 bars left to the day, but closing on the high, they bought it. So usually you do not get a major reversal. Here we got some profit taking at the end of the day, very strong day like today, climax like today. But even with the sell-off, it's still not particularly bearish. A while ago, I mentioned on the 1-minute chart that this bar was a surprise bar late in the bull trend and a good candidate for an exhaustion gap. Sometimes you get one more push up and then the reversal. In general, when you get a big bull breakout late in the bull trend, 60% chance is exhaustion and you're coming down to its low. You might get one more push up. 40% chance it's a measuring gap. And here's the start of the move. And here's the breakout point. And you can see it's just about a measured move, a little bit more. Good reversal. Probably we'll get a couple legs down on the 1-minute chart. Looks like we'll probably get to the moving average on the 5-minute chart. This is one of those end of the day sell-offs that usually becomes a bear trap. So it looks like the bull trend is going to reverse into a bear trend, and instead the bulls end up buying it. Here's the bottom of the buy climax. So this is the target for the bears. I don't think we'll get there, but we might. Bulls want this to be 2 legs down, 1 pause 2, similar to this 1 pause 2, but 66 is another one of those surprise bars. So the odds are we'll get at least a small second leg down, even if we go up to the 66 high first. Remember back here, 28, I said once we get a couple ticks above it, then it's the second leg down idea is gone. It favors the bulls once you get a couple ticks above the top of the surprise bar. So if we get a couple ticks above 66, that would favor a resumption of the bull trend. Right now, it's more likely that we'll get a second leg sideways to down. For the bulls, a bear trap, but big enough bear bar 66. I think a lot of bulls will not buy above 67. But if we get consecutive bull bars, 30, 31, then the bulls will look to buy again. Market's still always in long. Bulls who exit below 64 theoretically have to buy again above a bull bar. 67, it's reasonable to do it, but it's a big enough bar 66 so that a lot of bulls will wait for a second entry buy. As strong as the bulls have been, they were unable to trigger the buy above 67, increases the chances that we could get a deeper pullback. But even if we do get all the way down to the 51 low, it's still probably an end of the day bear trap. More likely it'll reverse back up. Sometimes you get that when the market is really overbought. Here we got a quick collapse, but you're still looking for a reversal up at the end of the day. This is earlier in the day. Small bear trap, small bear trap, bigger bear trap. We're running out of time. That's one problem that the bulls have. This is possible, like today, bear trap and pop up at the end of the day. Bulls want to buy above the bull bar, 20 gap bar buy. We have not been down to the moving average in more than 20 bars, since about 50 bars, 60 bars. So there'll be some bulls here. You can call it a wedge with 60 or 64 for the first push, and then 66, and then this. The bears want to get a breakout, a gap below 66, and then a measured move down. And the bulls want a wedge bull flag. That gets us near the bottom of the buy climax, which is the other target for the bears. But if the bulls get a bull bar, especially closing near its high, they'll buy again. They get out below 64 or below 61. Unlikely for the bears to get it always in short, maybe 30% chance. Suppose it's only a one-tick bull body. Will the bulls still buy? They might. We're still always in long and a very strong bull trend, and we have an important target above. We have 45 minutes to get there. If the bulls are good, I was going to say if the bulls are good, they would close the bar on the high. They did not, but always in long, I think the bulls have to buy again above 69. The bears hope that the buy triggers and that the bears are able to reverse it down and get a bear breakout below a wedge bull flag. Higher probability, you wait to see what the close of 70 looks like. If it closes near its high, you buy either the close or above 70. Bears, I would get out of shorts above 69. This is more likely an end of the day bear trap like this or that than the start of a bear trend. 3 bear bars, bulls still bought it. You buy above the bull bar or you wait for a second bull bar, buy the close or buy above. Extreme example of it, but bulls still bought above the bull bar for test of the high. Pair of bear bars closing on their lows, but just a bear trap. A small triangle. Market's deciding we're going to get a bull breakout above the bull flag, which is more likely, or a bear breakout below the bull flag, which is less likely. but 3 dojis. In general, breakout mode, 50% chance the first breakout up or down reverses. Since the market is always in long and more likely to go up, I would prefer to get a bear breakout first that reverses up, because then you'll know the bears have given up. Some bulls prefer to buy above a bull bar, like above 69 or 72 is a bull bar, then above 72. In general, that's my rule with always in long. If you get out of an always in long trade, like below 61 or 64, and the market stays always in long, and you have to get long again, I usually say that it's better to get long above a bull bar. And right now, the most recent bull bar is 69. This hour opened with bar 61, and right now we're below the open of the hour, and we have about a minute left. So the bulls need to get 72 to close above the open of 61 if they're going to get another bull bar on the 60-minute chart. Is 30 minutes enough time to get up to the open of the week? It might be. It's still, I don't know, I guess I feel like less than 50-50 chance we'll get there. Bears want double top 69 and a lower high, and then a break below the wedge for a measured move down. And bulls want the trend resumption up. The bulls have a probability advantage, but if the bears get a bear bar here, a lot of the bulls will give up. This is the bottom of the buy climax. I think the bulls will get out below a bear bar, even though it closed in the middle. So I would get out below 73 or below 69. And for the bears, I think it's not a very good short. I would be out of shorts, and with 73 closing with a big tail below, I would not short it. The bulls should not have let that happen. They're hoping for a tail breakout and a big high too, but they should not have allowed it to break below 69. I think it makes it unlikely that we're going to get up to last week's high, and the best the bulls probably can get is a tight trading range. And for the bears, not a good sell signal bar, 73, and tight trading range. So right now we're probably going to go sideways. If we're going to have a trend, it's more likely down. If we get a bear close, we're probably always in short, but I doubt we're going to go very far. A tight trading range is a magnet, and just like it was hard for the bulls to break above it, it'll be hard for the bears to break below it. But if 75 closes on its low and gets a little bit bigger, then we might get sell to close. Bulls trying one more time to get a bull flag breakout, but unlikely to get to the open of the week. However, I think they've done enough. They've gotten the close up near the open and well above the midpoint of the week. That's the final chance for a swing up. For the bears, they have a breakout 74, bad follow through 75. Right now, I think it's on the short below 74, but it'll reverse to long above 75. This is not good trading very late in the day and a lot of sideways trading. So the odds are against a big move up or down. The bears needed another bear bar 75. Instead, they got a bull bar. I think the bears get out above 75. And the bulls are not happy that 75 has a 2-tick tail. But if they're trading always in, and if they get out for any reason, they buy again above 75. Probably if it triggers, we'll simply stay sideways. Well, I'm letting it go. I think we're always in short. Bottom of the buy climax is a target. Very impressive day. This is an unusually strong small pullback bull trend. You only see a day like this a couple times a year, maybe 3 times a year. You get reasonably good, strong pullback bull trends up and down a few times a month. But when you get them as strong as this, it's really just a few times a year. The bears got a sell-off down near the bottom of the buy climax. So the strong bears who sold all the way up are finally making money at the end of the day. However, I think the bulls did a very important thing. They got a good buy signal bar yesterday, and it was the third buy signal bar in the past couple of weeks, all looking pretty good. That increases the chances of a rally. And today they have a very big bull body, and that is good, despite the tail on top. So some profit taking at the end of the day. Next week is really important. Can we break strongly above this lower high? The bears want a double top bear flag, break below the neckline, measure move down. So can we break above this? Can we break above that? Can we break above that? If we break strongly above this and get another couple good bull bars, then we probably will break above that and go up to here. So early next week, important. Will the bulls change the character of the market? Here, every couple days, we change direction. And we have a couple days here. Will we change direction on Monday? We have a couple bull bars here and then sold off. We got 5 bear bars here, reverse up, 2 bull bars sold off. And the context is good. The setup looks good for the bulls, but they need to perform next week. I said yesterday that this rally from bar 37, those 6 bars were really important. And whenever you see strong bars like that and the context is good on the higher time frame chart for a reversal up, the odds are you're going to get follow through buying on the next day. And you often get a swing up lasting weeks. So this could be the start of a move up to the all-time high. Don't know. Today we had a very strong breakout here, and then we channeled up, and we pulled back to this tight trading range at the end of the day. I gotta adjust this. Okay. A lot of the day was really impressive. I talked in here and here that, especially here, there's no way for the bears to make money. So either you're buying at the market, or you're waiting for a reversal and you sell the reversal, or you're waiting to buy a pullback. On the open, we gapped below yesterday's trading range. I thought we had a chance of gapping above yesterday's high and getting a big bull trend day. When we gapped down below yesterday's trading range, I thought we would have a harder time getting a big bull trend day, but it did not matter. You know, it might be that the computers thought that they would trap bulls out by having it gap down, and then the bulls would have to buy higher and provide fuel for a sustained rally. And they were right. You know, I ended up buying, you know, several times on the way up. For stop entries today, you buy above 1, I would not, but bar 2, you now have a bull bar closing on its high, probably an okay buy. We may stall at the moving average. Yesterday's close, yesterday's high, the 60-minute moving average. We had 5 bars, I guess 4 bars without a pullback, so probably buyers below 4. The bears had an IOI on 6, but a big tail, so low probability sell, probably buyers above. If you get out below 6, you get in long again, either above 7 or above a bull bar 5. Couple bull bars, the bears tried to get a basically a second leg trap 10, and they failed. And then we got 11, 12. Surprisingly big breakout, so probably going higher, possibly a measured move up. And then we had a very small bull trend starting up there at 16. The bulls over here at 18, if they get out for a micro double top and a buy climax, failed breakout yesterday's high. If they get out, they got to buy again above a bull bar, either 20. If they do not buy 20, they have to take a second entry by 22. And same thing here. If they get out below 26, we got 2 legs down. I would not buy above the bear bar 29, but if you're trading always in long, you got to be buying above 30. You could get out below 39, but this channel is so tight, minor reversal, you could stay long. If you get out, you buy either above 41 or above, we have a micro double bottom here, 51, and then we just went up straight. Okay to get out below 61. If you get out below 61 and you're trading always in, you got to buy again. 62, not great. 63, not great. I think you get out below 64. Aggressive bears would sell below 64. And then in here, I thought the probabilities became a lot less because of the tight trading range. I think we have a wedge bull flag, 1 or 1, and then 2 and 3. And the bulls have to buy again above a bull bar, either above 69 or above 71, both triggered. And then we went outside down and below both, and we got a bear breakout below the bull flag, 74. Good bear bar, but terrible follow through 75. The bulls tried to get a wedge bull flag, 62, 69, 75, could not trigger. The bears got a breakout 76, probably going lower, but probably not a lot lower. And we went down for 1 more bar. Buy the close, sell the close. Well, I thought we were always in long on the open, and 2, 3, 4, 5 are all buy the close. 6 probably buy the close as well. And then 8, 9, 10 is buy the close. You might get out below 10. 11, 12, 13, 14, 15. Same with 16. Starting to go sideways here, so it becomes less of a buy the close. The 23, 24. I don't know. We're pretty far above the moving average. Better to buy closer to the moving average. This is really not good buy the close. This is more limit order buying at the low of the prior bar than buying closes. And then here, 52, 53. I've said that the only thing you can do is buy. If you're going to do anything, you have to buy, because we're not even getting pullbacks big enough for limit order traders to make any money on shorts. So by the close, 53, 54, 55, 56, 57, 58, 59, 60, and then it stopped being by the close. 76, sell the close, but 1 bar. I don't think it's worth it. Limit order trading, bar 4 low was a high probability buy. 6 low, a lower probability, but still okay. And 18, micro double top, parabolic wedge. I think that's not a great limit order buy. 26, Probably buyers below, but again, parabolic wedge. 32, probably better. 43, and then here, bear bar, not a great. Same with this. I would not buy those lows, and then here, I would not buy those lows. And selling, the bears made some money selling, but in a small pullback bull trend with small bear bars and the pullbacks being really small, I usually do not like to sell. And if they are selling, they're selling above bars. You know, they made money selling this high, they made money selling that high, they made money. This one I think stayed open. And then they made money here, here, here. And then we got this relentless trend. I think whatever money they made, they ended up giving back. If they kept doing the same thing all day long, if they kept selling highs, it's just really hard to consistently make money or to end up with a net profit if you're selling with limit orders in a small pullback bull trend. Easier to make money buying the market, buying bull closes, buying above bull bars, buying above bear bars, buying below bull bars, even buying below bear bars if you use the appropriate stop. The stops are always further than you want. So for example, if you buy the 26 low or the 28 close, your stop is down here. But all day long, none of the stops got hit. Even the stop below 51, even with the sell-off, that stop never got hit. You'd obviously get out before then, but you know, if you're buying at the market, buying a bear close, buying below a bar, buying above a bar, you might get out on the breakout below the wedge 69. But you know, the strategy was a good one all day. What kind of follow through will we get after a day like this? We're probably going to get follow through buying. Small pullback bull trend, bad follow through the next day, but look at the days that followed. Small pullback bull trend, bad follow through for a week, but then we started to go up. So sometimes the follow through is not right away. Here we got a reversal. Let me go to my follow through. Strong bull day, sell off at the end, but gapped up and rallied the next day. So here's the follow through. This is this day, and this is the follow through day here. And we got several days of follow through buying. Two big bull days, 1, 2, we got a reversal. Strong bull day, and the next day, doji bar. I'm just looking at these things. I haven't looked at them in a while. Strong bull day, and then we got a bear inside day, but we got follow through buying over the next several days. In any case, as you know, I'm bullish. I've been bullish for forever. I thought we'd get a 10%, maybe 20% correction. We ended up with a 10% correction after the extreme buy climaxes on the daily, weekly, and monthly charts, and we've had that. And I've also been saying all along that I think we're going back up to the high, and this is as good a setup as we've had so far. This was okay, but the follow through is bad. This is okay. Let's see what the follow through looks like next week. Will it look like this, increasing the chances of more sideways, or is it going to look like this, increasing the chances that we're going up to this high and up to that high? Try to keep the questions short. Okay, question. When bar counting, using longs as an example, do you only count bars that have a low below the low of the prior bar and then the next bar break above? Or does an inside bar that had a higher low but equal to higher low and the next bar broke above that high get counted too? For example, bar 17. Okay, he's talking about, for example, here. Okay, is this a low 1 but did not trigger, and then is 18, is this a low 2? Okay, for example, I would call it a micro double top, and I would call it, strictly speaking, it's a low one. It's a variation of a low one, and on a smaller time frame chart, it's a low two. And then the opposite over here, we have a bear bar of 16, and then an inside bar of 17. 17 did not go below 16. 16 did not go below 15. Is it still a high one? It is. It's a pause in a bull trend. And same with 10. It's a pause in a bull trend, and it's a high one buy. If you prefer to buy above a bull bar, you buy above 11. So any pause in a bull trend is a high one. 58 is a high one. 62, we went below 61. That is a high one. This is a high one as well. A breakout and a pullback. Does not matter if 33 goes below 32. It's a pause, and we have a lower high. So 17, even though there's no pullback, we're in a micro channel, about a 10-bar bull micro channel. We have a high that's below that high, and I would call that a high one buy. Okay, I've been studying for thousands of hours, and I'm still not able to trade well. At the end of the day, I can read a chart like an expert, but real time, I never know how to structure a trade around my premise. I usually mismanage, even though I trade small. Do you have any advice? You're doing the right thing. You're spending a lot of time studying, and my recommendation would be to start with something that where the math is pretty easy and the management is pretty easy. And at any point, starting in here, the market's always in long. And at any point up here, the stop has to go right here, right? At this point, one of two things is true. Either it's a bull trend and we're going higher, or it's a bull leg in a trading range and we're going lower and then higher. So you buy for any reason. You buy at the market, you buy market here, put a stop down here, and go to the gym and come back in an hour or two and see what happens. And you know it. I mean, you know when you see this pullbacks, but on a higher time frame chart, there are no pullbacks. It's a breakout. Look at the 15-minute chart. On the 5-minute chart, there are a lot of pullbacks here, minimum pullbacks. Do you want to sell? No. So if you're long, you're holding long. If anytime in here, your stop is here or here. And then when it starts going up again, another big bar, you can put your stop below here. We got a series of bars when you have a higher low, you can put your stop below there. Got another breakout, put your stop below here. Another breakout, you can put your stop below here. Bear bar closing on its low, you can stop yourself out there. So my recommendation would be swing trading, and when there's a trend, and sometimes by the time you're convinced that there's a trend, you're entering late. But like I said, a bull trend is not going to turn into a bear trend without at least a micro double top. And if there's a micro double top and a bear bar closing near its low, for example here, right, you can get out, but then if you get a bull bar, especially a second entry bull bar, you buy again. If you get out here or below here, you wait for a bull bar and buy above it, either here or here, and just keep repeating that process. On those charts that I print out every day on the Brooks Trading Course website, that's how I'm looking at it. I'm looking at it from the perspective of an always-in trader. And some of the trades are losers, some of the trades are winners. But if you add them up, if you look at any day, I have not looked at it and added up the pluses and minuses on the winning trades and losing trades. But I'm very confident that probably 95 to 99% of the days, it's a profitable strategy. So I think you've done the important thing. You've learned how to read the markets. Now you have to, and if you're finding that you're not reading them fast enough, then it's better to back off, use wide stops, and then just be patient and don't panic out. So, this is a bad example because you only see a day like this a few times a year. But on most days, like here, are we always in long or short at this point? We're short, so your stop goes here or here, and you hold on, and you can either exit with 4 points or exit on the reversal up. Okay, we're probably always in long here, stop down here. Here, we're always in long, stop down here, and you just keep doing that. And if you get a reward that is at least twice your actual risk, and it's at least 4 points, you can exit part or all, and it's a profitable strategy. Okay, question. Do you think that today confirms that the bulls are taking over on the daily chart? No, I think they need follow through next week because of what I showed on the daily chart. We've had lots of consecutive bear bars, lots of consecutive bull bars, but not more than 2. So the bulls need today, which is good. Yesterday was good, but they need follow through next week. If they get 2 or 3 more bull bars, then the odds are we're going up to the all-time high. On the other hand, if we start getting reversals every 2 or 3 days, then the bears might get another lower high, and we may get another test down. Right now, it's more likely than not that we've begun the reversal up. 3 good bull bars, higher lows, and the trend before the triangle was up. Can you talk about the 1-minute sell signal? Signals at 8:36 and 8:46 a.m. Here's 8:36, 8:37. I think that's not a particularly good sell. It's a spike pullback channel, but you have a 10-bar bull micro channel. So I personally would not sell with a stop there. And then at 8:46, this makes more sense. You have 2 legs up, 1 pause, 2, and a lower high. And here you have 6 consecutive bear bars. We're probably getting a second leg down. So while I would not sell with a stop below that bar, I think it's reasonable to sell with a limit order at the high of this bar, at the close of that bar, or at the low of this bar for a scalp down. Question, when should a consistently profitable trader increase his position size from 1 contract to 2, 2 to 3, 3 to 5, 5 to 10? And it's just an issue of comfort, right? Usually when traders increase their position size, especially if they're starting out and they're going from 1 to 2, they tend to get scared, and they tend to change their trading style, and they go back to beginner style trading, only thinking about risk and ignoring what got them to be consistently profitable. And at some point, a trader should be able to make the transition, and once he does, he's all set. So you just try it, and if you find that you're not managing your trades correctly, you're not taking trades that you used to be taking with 1 contract, then you just go back to 1 contract. I remember years ago I traded with a guy. I traded with him online for years. He was an excellent trader. He was probably making 15 points a day on average in the E-mini, and that's when the E-mini was a fraction of what it is nowadays. And he was trading 4 contracts, and I used to ask him, you're trading 4 contracts, but you're winning, 80-90% of your trades. You're winning every day, and you could trade 40 contracts. You could trade 400 contracts. And he said, Al, I make a lot of money, and I'm happy. I don't have any stress. And if I increase my position size, I will be stressed out, and I will be, less happy. And the extra money, if I make it, will not improve my quality of life. And therefore, I'm going to continue to trade 4 contracts. So, and I think that's valid. As long as you're trading consistently well, you're consistently making money, and you're consistently happy, I think that is the most important thing. And if you can increase your position size and maintain all of those things, sometimes there's a painful transition of several months when you increase your position size. But if you're reasonably able to go through the transition and everything else is still the same, still profitable, still happy, then you can do it. And I would not worry about working up to 100 contracts or 400 contracts. You don't need that. If you're trading well, you do not have to trade many contracts to make a lot of money. I remember there was another guy I traded with a long time ago, and he was trading 3 E-mini contracts, and he was making about $1 million a year trading 3 E-mini contracts. So you can make a lot of money without trading a whole bunch of contracts if you trade them well. Okay, hope everybody has a good weekend.